we're actually going to begin with a large cap. Given the importance of ResMed, it's one of the first to report. It's out today. So let's go there. That is our stock of the day. And it says that strong global business delivered a lift in profit over the December quarter, beating analyst forecasts. The company's net income up 14% over the quarter to $393 million US, revenue increasing to $1.4 billion US, driven by strong demand for sleep and respiratory care devices. It expects consumer wearables and therapies that track sleep health to encourage more patients to use its devices. It has booked a $6 million US restructuring charge. Richard, let's start with you.
Get out of our sleep apathy.
Very good. Right.
Like ResMed really is a strong company. Like what we liked there was we saw the revenue up 11%, net income up 14%. So really what you're seeing improvement in gross margins, and that's a sign of just how strong this company is. Like we've been backing SomnoMed, another sleep apnea specialist, but well in the small cap spectrum in the past year on a turnaround, and that turnaround has sort of come to fruition a bit. But over 5 years, ResMed has been the place to be. Like it looks expensive, kind of on traditional metrics, dividend yield sub 1%, cash flow multiple around 17 or 18 times. But really, you are paying for quality. And I think when we see a market that's very nervous, I think ResMed's a good place to be.
All right, it has struggled though, obviously, hasn't it? Over the past
it's struggled because I guess growth always at the big end of the spectrum is difficult because they are a dominant provider, but they are producing the cash flow, they are producing the dividends. So I'm just saying it's a good blue chip holding. That's what I'm saying.
So
Andrew?
That's a hold then for you, yep.
No, I'd be a buyer actually.
Oh, you're buying. Okay.
I think sort of where we're seeing what we were saying at the start, what we're looking for is quality, and I think it's reasonably priced.
All right. Luke, how are you seeing it?
It's hard to disagree with that final take there from Rich. I mean, this is a quality business. It has been for a very long time. My very quick back of the envelope numbers, about 23, 24 times earnings, NPAT too, not an adjusted EBITDA or something like that. That's a pretty fair price for something like this. It's sort of been swept up, as we're sort of talking about before, large caps and large cap growth. That sort of last 3 months of 2025, we hit pretty hard. ResMed swept up a little bit in that, but I can see people start to come back to stocks like ResMed and others in that more defensive healthcare space as sort of the carnage in tech rolls on. These guys, yes, they have been a little bit expensive in the past, but you're getting a quite defensive earnings stream from them. It's really hard to fault the actual fundamental business. Low double-digit revenue growth, good margin expansion, 15% NPAT growth. That's the exact sort of thing I think investors love to see. And I think as well, the key one, I remember talking about ResMed in the peak of that sort of Ozempic GLP-1 fears, and the share price really came off quite hard. I remember pointing out quite a few times on the call, Andrew, that they were suffering from some gross margin weakness. Their gross margins had sort of declined from low 60% region down into the mid 50s, and it was really hitting that bottom line quite hard. Those gross margins are back up, 61, 62%. So that's where a lot of this earnings growth's come from. The business is fully recovered, and I think the market's past those GLP-1 fears as well. So I agree with Rich. I'll have this as a buy. It's not something I'm looking at every day as a large cap, but sort of 23, 24 times earnings for this type of business. That pullback over the last few months, I think, has given you a pretty attractive entry point, on that sort of medium-term view.
Well, that's not a bad way to kick off the show, isn't it? With a double buy for our stock of the day, which is ResMed.